Good morning, this is Trevor Charnley from Moneycorp. I'm the head of client sales and operations over here. We're over the Easter recess parliamentary, and at which point it seems like an appropriate moment to run through the state of play, where we are from a Brexit perspective, what the last 4 months has looked like, and therefore what the next 6 months is likely to hold for you. In terms of recent Brexit developments and key dates, the 29th of March was the key Brexit date, so that was when the UK was meant to leave the European Union. It became evident mid-March that that date was not going to be achievable, so the 14th of March the House of Commons approved that Brexit extension. That was an internal agreement, at which point they then need to go to the EU to seek that formal extension period. The 29th of March came and went without much event. There was a technical extension to the 12th of April. That was to allow for the Emergency European Council, at which point that formal Brexit extension would be discussed. That council started on the 10th of April, and on the 11th of April, the Brexit extension was agreed with the EU27. Theresa May originally requested an extension to the 30th of June. She believed that that extra 3 months would be sufficient to get the deal through the House of Parliament. The EU were much more in favour of a longer extension. They'd originally pitched a 1-year extension dubbed a flex extension to allow the UK to leave earlier should they get a deal through Parliament. However, they ended up coming to a compromise, and the 31st of October 2019 was agreed. That is still a flexible extension. So should a deal get ratified in advance of the 31st of October, the UK can leave the EU prior to that date. 23rd to 26th of March, 23rd to 26th of May, the European parliamentary elections take place, and the UK is currently expected to participate in those. And then finally, of course, 31st of October is now our new Brexit deadline date. In terms of public opinion, it seems to be wearing thin. Even as recently as October 2018, public opinion was relatively split. There's plenty of support for middle ground measures such as delayed, continued EU negotiations. As you can see, you get to the polls at the end of March, they show a significant swing towards far more hardline measures to get this saga ended. It's no surprise if you look at media outlets, Brexit is front page every single day. It's no surprise that the public are getting sick of reading and hearing about Brexit, and therefore they are looking for some clear direction and an end to it, hence the change in opinion. The key challenge in terms of getting this deal through has been support from the House of Parliament. So support from the opposition and support from the parties within the House. So the next step for Theresa, she's built her deal, she's had it agreed with the EU, but she cannot get it through Parliament. So the next step for her is to try and garner further support. And the best way for her to do that is to work with the leader of the opposition to try and get whatever amendments in that allows both Jeremy Corbyn and his party to support this deal, and therefore talks have been opened. Media have been reporting that they have been going well and it's been positive. However, this is just a quick snapshot of how the public perceive that. So in terms of how the first question, what do you think is the most likely outcome of compromise talks on Brexit between Theresa May and Jeremy Corbyn? The public believe that there will be no agreement between Theresa May and Jeremy Corbyn. It seems relatively negative. Do you think compromise talks on Brexit between Theresa May and Jeremy Corbyn would be a good or bad thing for the outcome of Brexit, or will they make no difference? And again, the most popular vote on that particular poll is that it will make no difference. Now, of course, this poll was taken early April 2019, at a stage where the public have been watching this lack of consensus in the House. So it's no real surprise that, generally speaking, the public don't believe that they will cooperate and collaborate to get to a successful exit. That may change as we progress forward and the media reports things in a different fashion. In terms of key currency pairs, so sterling euro, we've seen a 7.7% variance between the highs and the lows so far year to date. That has represented great opportunities for both euro buyers and euro sellers to take advantage when rates have moved in their favour. In terms of sterling's overall position, so sterling reached a 21-month high in March versus the euro, again representing a great opportunity for euro buyers, comparatively speaking. And as we trade this week, we're currently trading around 1% from that peak. So again, for those euro buyers, comparatively speaking, things looking relatively good. Other key currency pairs, sterling dollar. So again, 5.8% variance from the highs and the lows year to date. Again, representing those opportunities for for dollar buyers and dollar sellers both alike. Really important that you keep tabs on the currency market so that you're able to take advantage when things move in your favour. There's a significant low for this currency pair in December 2018, so a 2-year low experience, so a depressed period for dollar buyers. However, sterling has recovered somewhat and is currently around 5% higher than that 2-year low. So dollar buyers, comparatively speaking, in the short term, in a good position. So in conclusion, current Brexit date is October 31st. The Prime Minister has been incredibly confident in speaking about that being more than sufficient to get a withdrawal agreement through the MPs in the House of Commons. I'm sure that many people may think otherwise, but let's see how we progress over the coming months. Public patience in the process seems to be running out, as support for a hardline Brexit or abandoning the process altogether both grow in the opinion polls. So again, that'll be interesting to see how that progresses over the coming months. I suspect we will start to see less political news, certainly for the next few weeks. We've obviously had the parliamentary recess, and therefore the Brexit noise in the media has quietened somewhat. But even this week, which is the first week that Parliament have been back, news outlets have been relatively calm and quiet in terms of Brexit. So I suspect we'll start to see that come down a little bit over the coming months, and therefore public opinion is likely to change as they stop getting bombarded quite so much with Brexit media. Sterling has remained comparatively strong despite that continued uncertainty around Brexit and the terms under which it will happen. Sterling euro in particular taking advantage, getting to that 21-month high in March, and therefore representing a great opportunity for euro buyers at that point. Markets have continued to react positively as the likelihood of a no-deal Brexit diminishes. So that was the big concern for investors in particular, that no-deal Brexit scenario has been particularly negative. But as the likelihood of that has continued to lessen, sterling has reacted more positively. And in all likelihood, we're going to see probably the best part of a further 6 months of negotiation, debate and uncertainty. So from a perspective in terms of hedging, if you have any requirements on key currency pairs involving sterling before October 2019, you should consider these points. So we've seen a high level of volatility in the first 4 months of the year. I would expect that political news will quieten somewhat. So I don't think we'll see the levels of volatility that we have seen, or the frequency of volatility that we've seen, certainly in the short term, while the collaborative cooperation starts to take its form between the Conservatives and the opposition. But key point is, any currency pair that you're trading with that is in relation to sterling, it's important to keep tabs on what's going on in the market, make sure you're aware of where you are rate-wise, and speak to an expert. Make sure that you've got somebody on your side keeping an eye on your position, keeping an eye on opportunities in the market for you to either buy or sell whatever currency it is that you're trading with. As you can see, the first 4 months of the year, with huge levels of volatility, many people have been able to take advantage when rates have been in their favour, but by utilising the tools and services available to alert them when those opportunities come up, whether it be a currency dealer or whether it be rate alerts or market orders. Really important that you utilise the services and tools that are available out there. And that's it for me. Thank you very much for listening. It's much appreciated. We'll be with you again, no doubt, in the next few months as we see further developments from Brexit talks, and we'll give you an update as and when appropriate. If you need anything from us, then please do get in touch with your account managers. They'll be more than happy to talk to you about either the content in this particular piece or your currency requirements going forward.